Rahul Sharma. He's joining us from JM Financial. Rahul, hi. Thank you so much for speaking with ET now. First up, for the market itself, 17,700, 17,800 is acting like a big hurdle. What do you think will take the markets higher from here on?
Yeah, very good afternoon, Anisha. So, boring is good. I think, that is very apt, considering the way we've rallied 1,000 points and the cool-off consolidation was the need of the day. So finally, that is happening. And one interesting thing is yesterday we've clocked the lowest volumes in Nifty futures for the last 12 months. And basically, what it suggests is on a down day, not many participants are interested in going short on the index, which means the downside is pretty much limited as far as the cooling off is concerned. Now, what are the key levels to keep an eye on? So one is, you keep an eye on 17,500, which is where there is a congruence of the 50-day, 100-day, 200-day moving averages. Second noteworthy point is the mid and small cap indices have not given up at all. So basically, the risk or the hot money is still there into the market, and as long as this segment of the market doesn't give up, I think dips will get bought into the market, and eventually we should be heading towards the 18,000, 18,200 mark anytime soon. So I think this is a buy on dip market. 17,500, 17,400 is an area where you should be ready with your buy orders. Once the correction cooling off is done, I think the second leg of the rally should see us taking beyond the 18,000 mark.
Well, Rahul, Somit this side, the Nifty Pharma Index, it was up around its 200 DMA levels, but again it has moved lower. So do you think that 200 DMA is working as a hurdle for the Nifty Pharma Index? How do you see that index moving ahead?
Yeah, so pharma stocks have done their bit. The way some of these names like Aurobindo Pharma, Dr. Reddy's, the way they have moved, it seems like we are towards the fag end of this rally. So it is advisable after such a big move, especially on the index as well, to take some profits, to take money off the table, look for dips for re-entry, and this sector has done most part of the up move that we were expecting. Now, I think the baton will shift back to capital goods. Capital goods have seen a pullback. Larsen and Toubro remains our topic on the capital goods space. I think 10% up move can be expected from these levels. Banks have also seen their cooling off. I think PSU banks are the ones where based PSU banks, the smaller tier 2, tier 3 banks have also seen good traction. So I think bankings, especially the PSU banks, which had been laggards, have seen a fresh breakout on Friday on a weekly basis. And now I think a follow-up round of buying should come in, and we should see more upside coming in these names. IT is one sector where there is pain. I think this is the one sector which is dragging the markets down. Maybe another few trading sessions here and there. Some consolidation, if it happens, should be good for the sector. Otherwise, most part of the Nifty components seem to be okay, and especially given the broader market setup, which is the Nifty 500, the mid cap and small cap indices, all of them are suggesting that it's more of a pullback than a proper reversal that markets participants were fearing.
So a bit of a pullback and not a complete reversal of sorts at this point of time, and the top recommendations come from the capital goods and banking space. Canara Bank as well as L&T are the two top picks. On that note, Rahul, we let you go. Appreciate you joining us today.
Thanks, Anish.